have to become vulnerable, right?
Yeah.
If it's say to someone or to your network of friends, I don't have enough money, and that's you become vulnerable, and then you say, are you interested?
Right.
And so a lot of people will not do that first step of becoming vulnerable to get help that they need to get that get the project off the ground, to not take the action. So like one of my quote is fear plus action equals growth. New estate investing, if it's new for you, expect the fear because it's new, something new. And also too, real estate investing is that's not a low cost endeavor, right? If your first investment deal goes bad, you might be scarred for a long time and never invest again. Generally speaking, it might be 20% down for a single family home, and then 25% down for multifamily, and then it might be 30% down for different commercial asset types.
I'm trying to think the very first, well, no, it wasn't my first purchase, but there was a property, like I didn't do any of that, right? I just had this vision of what I wanted the property to look like. And God was on my side.
And you had no number. You went in blind. Is that
I
you
went
applying?
it, I went it totally blind. I saw it looked like a great property. Um, and I just had a vision of what I wanted it to look like. And I'm a buy and hold person, so the holding helped.
Okay.
Over time, the appreciation value of the property was amazing. So it all worked out. But in hindsight, I appreciate you saying it up front that the purchase price, the repair price, and the after repair value. Those are the three things that people really need to pay attention
Yes.
to when going into the investing arena, and especially if you're going to be serious about it, right? If you're really trying to do this thing. The other thing you said that was interesting is to get something every 2 years. Talk a little bit more about that. Why 2 years?
Well, it could be every year, but I just said every 2 years because if you are just busy with life in general, if you just set a goal of every 2 years versus every year might be too much pressure on you potentially, right? And
Mm-hmm.
I just said that to say, just because you might do that one property, get it stabilized, breathe a little bit, and then you jump it again. So I just said every 2 years, and that way you just don't stop doing it. That's yeah. If it,
Got
if it's for you, you might do every year
yeah,
as
got
far
you.
as like the time and the capital needed. But what I don't want people to do is to not take the action. So like if you look at my one of my quote is fear plus action equals growth.
Mm.
And so that action piece is, new estate investing, if it's new for you, expect the fear because it's new, something new. And also too, real estate investing is that's not a low cost endeavor, right? so,
Yeah,
so,
we didn't get into that part yet. So we talked about what I need to do, but yeah, how much money do I need?
so it's not like it's gonna be $5 or a few dollars. So that's the part of the fear factor of investing, right? But if you take the action, you get to the growth side. But yes, and that's where those three numbers are important because it's not a low cost endeavor, right? You don't want to be off at one of those numbers or just try to wing it. It will cost you a lot in the long run. And
Indeed.
we call it the law of the first deal. If your first investment deal goes bad, you might be scarred for a long time and never invest again.
Mhm.
But if it goes right, that first investment property,
Like,
you are more likely to continue investing.
indeed, indeed. So how much money? I have my numbers. I know how much it's going to cost me to purchase the property, to acquire it, how much it's going to cost me for the rehabilitation, if any, and what the after repair value is. So to get the financing, what else do I need?
Also, we also need, I will say, some okay credit score. We do have flexible options. And then from there, once you provide that information, I'll get you customized terms for that scenario.
Mhm.
So it's not a set dollar amount. If it's a rehab, the best case scenario for stuff that I have available too might be 10% down on the purchase side, and then we'll do 100% on the rehab side, and that'll be reimbursed as you complete the work. For properties that are turnkey, say a DSC or rental loan, generally speaking, it might be 20% down for a single family home and then 25% down for multifamily, and then it might be 30% down for different commercial asset types.
Gotcha. 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 And depending on the purchase price, that could be a nice little chunk of change. So you do have to have uh, some some skin in the game if you're going to go the uh, investment financing route. Yeah.
Or I always say,
Mhm.
if you have a good property as far as numbers are concerned, and you have low funds or low liquidity, reach out to your network, right? You'll be surprised who you might know who wants to invest in real estate. So, and that might help you solve that problem as far as the money needed to complete that project. So I
Gotcha.
would say, you as the investor, for that to happen, for you to reach out to say I need help, you
Hmm.
have to become vulnerable, right?
Yeah.
And to say to someone or to your network of friends, I don't have enough money for
Hmm.
this endeavor, and that's you become vulnerable, and then you say, are you interested? And so a
Right.
lot of people will not do that first step of becoming vulnerable to get help that they need to get the project off the ground.